Welcome to Flippening, the first and original podcast for full-time, professional, and institutional crypto investors. I'm your host, Clay Collins. Each week we discuss the cryptocurrency economy, new investment strategies for maximizing returns, and stories from the front lines of financial disruption. Go to flippening.com to join our newsletter for cryptocurrency investors and find out just why this podcast is called Flippening.
Clay Collins is the CEO of Nomics. All opinions expressed by Clay and podcast guests are solely their own opinion and do not reflect the opinion of Nomics or any other company. This podcast is for informational and entertainment purposes only and should not be relied upon as the basis for investment decisions.
Hi, this is Mike, producer of the Flippening podcast. I'd like to welcome you to this conversation between Clay Collins and Jesse Powell, co-founder and CEO of Kraken, a top 10 crypto exchange with an A transparency rating on Nomics, and one of the first legitimate crypto enterprises. Jesse started Kraken in response to the 2011 Mt. Gox hack. He felt that for Bitcoin to go mainstream, exchanges would have to professionalize. The conversation is split into 3 chapters. Chapter 1 considers the current state of crypto exchanges in 2020. Chapter 2 is a behind-the-scenes look at Kraken, covering services offered, recent acquisitions, and relationship with regulators. In Chapter 3, Jesse explains how Kraken differentiates itself and previews some upcoming releases. He also shares his views on NFTs and DeFi. Transcript and show notes for this episode are available at flippening.com/Kraken. That's flippening.com/KRAKEN. And now before we get started, here's Clay with a word from our friends and sponsors.
This episode is brought to you by the good folks at Nexo. Here's a word from them. Nexo is the only lender offering instant crypto credit lines, which let you use digital assets as collateral to get cash in 45 fiat currencies and stablecoins. You might remember Nexo from episode 64, where we spoke with their co-founder, Anthony Trenchev. If you haven't heard that episode, I highly recommend checking it out, as it's one of our most popular episodes to date. And Nexo has a big announcement related to credit lines. Their annual interest rates for credit lines are now starting at just 5.9%, which may very well be the lowest borrowing rate in the whole industry. Nexo is also a strategic partner of exchanges, OTC desks, and crypto funds through its portfolio of structured financial products. Institutional counterparties can earn up to 8% annually on their idle stablecoins, enter into asset swap agreements, or directly borrow crypto. Individuals can also park their cash and stablecoins at Nexo's interest-earning account to get an annual return of 8%. What's more, interest is paid out daily, and you can add or withdraw funds at any time. So if you're looking to borrow, lend, or swap digital assets, Nexo is your go-to partner. Definitely explore nexo.io, or if you're an institution, reach out to them at institutions@nexo.io. This episode is also brought to you by Uphold. It's the only app that lets you go from anything to anything in one trade. Bitcoin to gold, no problem. Want to send euros to your sister using your XRP stash? That's easy to do. Just one trade and 2 clicks to get this done. Trade instantly between cryptos, stablecoins, national currencies, metals, and more. It's seamless, it's instant, and it's cost-effective. You can fund with a debit or credit card, trade with 0% commissions, and withdraw to your bank account or external blockchain network instantly, and with no additional fees. You can even send BAT to your bank account. When you have an Uphold account, you really can send anything to anything. To get started, just go to uphold.com/Clay today. Again, that's uphold.com/Clay, spelled CLAY, and that's my first name. You can also download Uphold from literally any app store. Finally, this episode is brought to you by the Nomics API and CSV data export service. If you need an enterprise-grade crypto market data API for your fund, smart contract, or app, or if you need historical CSV dumps of trading data or crypto market cap data from top exchanges or even obscure ones, then consider trying out the Nomics API or our historical data export service. Our cryptocurrency API enables programmatic access to clean, normalized, and gapless primary source trade data across a number of cryptocurrency exchanges. Instead of having to integrate with multiple exchange APIs of varying quality, you can get everything through one screaming fast fire hose. And if you'd like to order historical cryptocurrency market data as CSV exports from top exchanges, then email us at sales@nomics.com.
Okay, back to our regularly scheduled program. Here's Clay's conversation with Jesse Powell, co-founder and CEO of Kraken. Enjoy.
Jesse, can you give us a little background on yourself and kind of the origin story of your involvement in the crypto asset space?
First of all, thanks for having me on the show. It's long overdue. I'm glad we could finally make the timing work out. Yeah, so we got started with Kraken in July of 2011, which was just after I had an experience with Mt. Gox, who had gotten hacked. It was basically the only exchange at the time. They had like 99% of the volume. They'd gotten hacked in June of 2011. And I went out to Japan to help them out for about a week and a half to get back on their feet. During that time, kind of came to realize that we ought to have more than one exchange in this ecosystem. And price discovery is incredibly important. And in order to really bring Bitcoin into the mainstream, we're going to need really serious, reliable, professional exchanges who can interface with regulators, who can interface with banks, get everybody comfortable and educated. And, that was really was going to be necessary to bring people across from the legacy financial system into the new world of crypto. So, we were primarily interested really in helping crypto grow. Of course, we saw a business opportunity there, but we wanted to really do it the right way, to have longevity as a business, and to serve the community of people that would be coming over the next few decades. At the time we probably thought, yeah, everyone's going to be on Bitcoin in the next 3 years and, the world's going to be a different place. But, in hindsight, we were way off in that prediction. And, it's probably going to be more like a 20-year story than a 3-year story. But, we wanted to do it the right way and build that bridge for people. So, we got started, on building Kraken in July of 2011. And, I don't know, it's obviously been a long road. We're almost 9 years going now. So a lot's happened in that time. But the space was a natural fit for me and for my co-founder, because we were both coming from the virtual goods world in video games, where we had been selling virtual items and currencies for online games for the last 10 years before that.
Just a couple follow-up questions on what you just said. When you went to Japan to help out, presumably Mark Karpeles with Mt. Gox, was that sort of as an engineer, or you wrote code, right? I don't know if you still deployed it to production on Kraken, but you have an engineering background.
Yeah, some. I would say like a very light engineering background. I haven't really been programming for like, production business stuff, since the early 2000s. Since then, I've pretty much been on the business product side of things. Definitely did not touch any of the code at Mt. Gox. I primarily went out there to help on the business operations side. I wrote the press release for Mt. Gox for that incident, helped hire a bunch of people, answered a bunch of support tickets, basically was trying to support Mark in any way possible, so that he could focus on the code and get the site back online.
Was that did you have a formal business relationship with him, or you just you thought this was sort of the best thing to do for your Bitcoin holdings and for the space in general, and you were volunteering?
I didn't have any personal relationship with Mark. Mark Gox was basically the only exchange that was around then. So I was trading there. A bunch of my friends were trading there. Roger Ver was trading there, and Roger Ver happened to live just a few blocks away from Gox at the time all this happened. And he went over to find out what was going on. And then, that's when he called me up and was like, hey, they really need some help. Can you come out? And, Roger and I go back to when we were teenagers playing Magic the Gathering together. Probably known him for, I don't know, since I was 16 or something like that. So, 25, I don't even know how old I am. I'm living in Bitcoin years now. 20 plus years, I've known Roger. So yeah, I was on the next plane to Japan when he called me up. And we kind of saw ourselves as this, team that was like going in, and basically everyone that we were close to at the time was in Bitcoin. So it was like a big deal. Everyone was worried about like what's happening with our money. The Bitcoin exchange is offline. I can't get my stuff. I don't know what the price is. So, we felt like we had a lot of weight on us to help Gox, the ecosystem, all of the people that we had referred to Bitcoin at the time.
So it seems like there's definitely this Magic the Gathering overlap with the original Bitcoin community. You mentioned, so Mark Karpeles obviously was into it. You said Roger Ver was. That's how you knew him as a teenager. Is that kind of just limited to that circle, or was there kind of this general overlap in the early days between Magic the Gathering enthusiasts and Bitcoin? Was there a lot going on there between those communities?
I think this is just like a coincidental correlation. Jed McCaleb also was a big Magic player who was the founder of Mt. Gox. There are a lot of guys. I think it's just like you're a nerdy computer guy, you play Magic, and there's, for some reason Bitcoin is naturally appealing. So I think there was something there. Like if you played Magic, you had some other things about you that like caused you to be interested in Bitcoin. So yeah, there are like a lot of early Bitcoiners happen to have like a history of playing Magic the Gathering.
It's kind of interesting to look at, your LinkedIn profile, philosophy and ethics and law from Cal State Sacramento, and then a bunch of kind of art and gaming related things. And then, now you're running a financial exchange. So it's kind of interesting to explore that path. Was the domain name Kraken.com purchased for the exchange, or was that something that you had in your back pocket for a while, kind of like MountGox.com, that you just happened to whip out when you decided you want to go down this path?
I had it in my back pocket for a long time. I don't even remember when I bought it, but I have been a domain hoarder for a long time. It's one of the original like digital goods that actually like appreciate in value, and I guess you could think of them as like NFTs. So yeah, I've been collecting domains. People had actually have traded domains for other assets, like they would World of Warcraft gold. So it was sort of fit in the same bucket with, the virtual goods business. And so I've been interested in domains for a long time. I bought Kraken. I've got, like 1,000 plus other domains. I bought Kraken a long time ago, and I thought like one day I'm going to use this for something really cool. I don't know what it is, but, when we got to trying to figure out what the name for the exchange should be, I thought of it, and it seemed to fit perfectly in my mind because, it's got like all the hallmarks of a great brand. It's short, it's fun, it's easy to say. Everyone knows how to spell it. It's metaphorically got all of these connections to markets. Like, when we talk about markets, we use words like liquidity and depth and whales and sharks, and, being kind of nautically themed, it fit that as well. So, it just seemed perfect in my mind, and so we went with it.
I think it was a smart choice. One of my favorite things about Kraken really is the branding component. There's so many brands in the space that, it's like, coin this or block that. There's basically 3 to 4 words that have made their chain, that have made their way into the names of all of these brands. And, you guys not only went in a different direction, but I also think that you're, kind of visually what you've done with your website, it's sort of like these purples and pinks, and it's a highly differentiated brand. I think it's one of the most highly differentiated brands in the space. Is that something that you sort of set out to intentionally do, or is that just organically flow?
It was very intentional. When we were picking the name for Kraken, it was the same situation with these like 4 words that were in 95% of all of the company's names. And, it's just like, we can't be another bit or block or whatever. And who knows what we're going to do with this company. It could be that for some reason, Bitcoin is outlawed tomorrow, and we got to do something else. We got to pivot to going back to sell virtual items or doing Forex trading or stock trading, or, we were building this asset agnostic trading platform, and I didn't want to pigeonhole us into just being like a crypto company, because I felt like in the long run, we were going to need to expand beyond crypto, and in the short term, anything could happen, and we might need to switch gears. So that's why we didn't go with any of those names. As far as like the design or the aesthetics, the artwork, art is something I've been interested in for a long time. I think it's fun to use it. I love graphic novels. I love being able to tell a story with pictures. I think that financial services companies are super boring, and I wanted to try to do something different. And hopefully it's appreciated. I think it's going to be an evolving process, and maybe we'll change the art up, once a year or something like that, and have a completely different aesthetic. But I wanted to find a way to incorporate more art and just have kind of like a less sterile environment for the service.
Let's transition to chapter 1, which is about the current state of the exchange ecosystem. You're one of these people who have been around long enough to, I think, actually kind of comment pretty intelligently or very intelligently about the kind of the arc of the space. It seems like at the very beginning, the job number 1 was like, let's just have a two-sided marketplace and facilitate price discovery. Let's make sure we're secure. But how would you describe the evolution of the exchange space, since you started observing it? And what are some of the maybe some of the notable major evolutions that kind of stand out for you, that where you were like, hey, like our entire business is changing because of this?
Yeah, well, we're getting pretty far along on the evolutionary process. And first, we just had spot, and then an exchange called Bitcoinica introduced margin trading, and then it's probably BitMEX that first introduced futures, and Deribit's got options now. So we're getting further along. There's still other stuff to be explored. DEXs are doing other kinds of crazy things. There's gambling, it's just explicit gambling, and prediction markets on DEXs. So the ecosystem is filling out. I think that you will see more consolidation because it's really like a network effects kind of business, right? Like you can build a moat around liquidity, around a user base, and to your point about doing everything at the same time, financial services generally, the large ones are doing everything, and it's like this ecosystem play where you don't want to give people a reason to go to another service. And if whatever exchange B is doing everything you're doing but plus one thing, then someone conceivably would move their entire portfolio off of your platform onto exchange B. And, then you've lost not just whatever the spot exchange business or custody business or whatever, but you've lost like everything to this other guy. And you see that happen with tokens as well. So there's sort of like a token listing, like defensive play where like maybe you don't actually want to support this token, but you have enough people saying, hey, I'm going to move my whole portfolio, my whole book to this other exchange if you don't list this one token. So I think you'll see basically everyone kind of converging on a very similar feature set. And then maybe competition comes down to, execution, the interface, maybe even just marketing and brand, or customer service.
It's been interesting to watch it evolve. It seems like there's definitely different paths you could go down. You could go down like a kind of a very Bitcoin focused path that's just focused on providing services on like banking like services on top of Bitcoin and going really deep, versus trying to add, every recent chain, sort of new asset that comes up that might have a short life. But if you're the first person to list it and people really want that asset, it's probably going to drive new account growth. Do you look at that? Like, in your analytics, like, have you found instances where simply listing a coin drives a bunch of new users to sign up, particularly to just trade that coin and end up staying? Like, is that a valid exchange growth strategy?
Yeah, for sure. Especially if it's a token that's not listed anywhere else yet. So there's a big first mover advantage in listing coins. However, people can move off again over time. If you don't keep up, they might switch again to another exchange that listed the one thing that you didn't list first. So it's probably a constant back and forth battle. Maybe you pick up some new users that stick around each time. But with crypto, the switching cost is super low. So, I think that the retail consumer that they're not deep into crypto. They just wanted to buy some Bitcoin and hold on to it. I don't think they're paying attention to this, but the guys that are actively trading, that are in the market and participating in ICOs and stuff, the switching cost is super low. They can move exchanges, in a matter of minutes. And you have to constantly fight to keep those guys.
There seems to be some fads that you guys have not bought into. Like, to my knowledge, you guys are not doing IEOs. You're not launching a DEX. You haven't launched an exchange token. It seems like kind of at your core, you're a pretty focused company. Is that kind of like on purpose and by design, or do you wish you would have launched an exchange token? How do you feel about some of these fads that you've passed up?
I think becoming basically an exchange token almost makes you a public company. And, we've done some crowdfunding through Bank to the Future, and we only had 2,000 participants there, which was like the biggest crowdfunding they've done ever, which was awesome. And it's great to have all of these people be Kraken holders and have a stake in the success of Kraken. But there were definitely a lot of people in that group that just do not understand what investing in a private company means. They might be used to participating, in ICOs. Maybe they're up 1,000x from the Ethereum ICO. It's like a total mixed bag. And, I think, the reality is that private companies, take a long time to find an exit, and, it could be 10, 15 years. I think the average for a company to go public is like 12 years from inception. So I think that the demographics, or the psychographics of like the people that are interested in maybe buying an exchange token, might be just a problematic, set of investors to deal with. They might have very misaligned expectations. So that's one reason not to do an exchange token. Another reason is we just haven't needed the money. I guess it never hurts to have an extra $1 billion in the bank, but, it doesn't come with scrutiny, and we're based in the United States. I like living here, for now. Regulators are calling us up on a daily basis. So, it's not, we also want to avoid having like a ton of complaints come in, or, people feel like, they participated in some sort of like unlawful securities offering, or they got scammed or something. It's a distraction from what we're really trying to do, as a business.
I imagine that especially when the price of Bitcoin spikes, you have a lot of support requests. So to add to that, 20, 30,000 people that think they should have the same information rights and as like a publicly traded company, as they would if they invested in a publicly traded company, or, in a Telegram room saying win moon and complaining about things and generating rumors and, wanting update. Like, that's just probably not something you want to deal with.
Absolutely. And then like for IEOs, it's, I'm personally very bearish on the public investing in private companies, for like a lot of the same reasons, like a small cap private company, $20 million valuation or something like that. I don't think it's very interesting. There's not a lot of information out there. Again, it might be like a 10-year story, to actually be able to sell your shares at a profit. You don't have information. There's not like a lot to trade on. So as an exchange, it would be not a very interesting market. Like we wouldn't list a coin probably that had like a $20 million market cap in like, 30 holders of that coin. So, it's just not appealing relative to all of the other things in the backlog, other tokens we could list, other things we could support staking for, there's so much to do. It really just comes down to priorities and, pricing like the cost of delay or opportunity costs of doing things.
If your present self could go back and talk to your past self when you were first starting Kraken, what advice would you give yourself? Like, would you be like, hey, you should start an affiliate program earlier, or, this futures thing is going to be like, way bigger than you might anticipate, or I don't know, what either sort of words of guidance or words of caution would you give yourself?
Yeah, good question. I mean, probably every startup founder would say this, but I would say like push the launch for like one more month and add a bunch of these other features that you think you're going to be able to add, in a little bit. Because like there's just like a lot of stuff we wanted to do from the beginning that we just were not able to get to because things took off so quickly. We shortly after we launched, so we finally launched the exchange to the public in like September of 2013. And then Gox blew up in like February of 2014. And so it was just like, less than 6 months later, we were slammed with a bunch of new users. And basically we kind of like went from working on the roadmap to going to putting out a bunch of fires and dealing with all of the issues kind of related to like scaling stuff that the users were dealing with, which could have been like problems with our banking partners or, I don't know, just random issues with the interface that we didn't predict. So I would say that would be like one thing, but it's the risk there obviously is that, your product is like never complete. So like, when do you actually pull the trigger and ship it? But there are a few more things that we would have loved to have in from the beginning, that we ultimately like didn't get to until years later. I would say, we wasted a ton of money on legal stuff, compliance related stuff in the beginning. And it was basically fleecings by the lawyers. They were happy to pontificate all day for you and educate themselves like on your dime. And we spent millions of dollars having lawyers basically tell us like, we don't really know, roll the dice, up to you. So, that was a complete waste of money. I think we were a lot more conservative in the beginning than we needed to be because we were worried about getting the regulatory stuff right in every jurisdiction. And, it turns out, most countries in the world don't have any clue what's going on and are not enforcing anything and are in this like wait and see or, explicitly like it's just, we've determined this does not fall within our regulations. And other companies that took a much more aggressive approach that just said like, screw it from the beginning, like didn't care about anything. I've gotten a lot farther faster. So, but that kind of thing, I guess, maybe only knowable in hindsight. And, maybe that approach may be only doable from outside of the United States. We were all very exposed here in the United States, and very aware of that. So, if I were to do it again, maybe I would move to Singapore or Hong Kong or something and set up the exchange there and have a much different risk profile and be able to be much more aggressive.
I've definitely had the experience before of having a basic question for an attorney and they managed to bring 3 other associates onto the phone call and they're trying to charge for all 4 of their billable hours. And they end up just sort of reading you the statutes straight out of the book and then telling you that they don't know anything and that they should generate another 5-page email that they're also going to bill you for. And the whole thing, that sort of situation seems really dishonest, frankly.
For sure. It's a total waste. I think, a trick that I've learned when talking to attorneys is rather than asking them how you can do something, you tell them whether it's true or not. Hey, we're doing this. Now write me up the defense. And then they're not in a position of deciding for you. They've got to actually come up with like the justification and the loopholes and everything for what you actually want to do.
That's a really cool idea, right? And then if they come back and they have no defense, then you probably learned something as well.
Yeah.
So I remember when I was interviewing CZ, it didn't sound like he hated his life, but he didn't make it sound like it was very easy either, right? Like kind of, changing servers in the middle of the night and, dealing with, PR huge PR issues and getting involved in all these kind of Twitter wars and stuff. Can you share a little bit about kind of how you spend your time, like, what your average day looks like, or at least your average week? And a day is hard to do. How do you kind of segment your time and where are you primarily focused kind of on a week in, week out basis?
I spend a lot of time in product meetings, just kind of helping gut check some decisions, helping to kind of direct the future product offerings or, changes to things. I love to be really close to the product. I consider myself a product guy much more than a business guy. Definitely not a financial services guy. I never would have thought I would be running a regulated financial services company, but truth is stranger than fiction. But, so a lot of time on product stuff, that's just kind of like as I want to do it and I enjoy it. So I end up doing it a lot. Let's see, regularly dealing with some kind of, regulatory issue, where I might need to give some kind of input. We've got a great team for that handles the majority of it. Let's see, speaking with reporters. I've got just meetings with my direct reports, which are, what do I have now? Like eight direct reports or so.
That's fantastic that you've kept it at that. That's really great.
It was 12 at one time, and then I got it back to 6, and now it's at 8. So it would still be great if it were less, but it's manageable now. And usually that's just like we go through what's happening, anything I might be blocking on or where they need a little direction on. But I've found as you grow the company, as a CEO, as you're growing something, it's really just about building the machine and making sure that the people under you are like empowered to sort of operate as autonomously as possible, so that you don't have to be making like micro decisions, which is just impossible. It's impossible to have all the info and be making good decisions about everything all the time. So getting those people right under you is really critical as you get bigger and you can't be in every meeting or, be aware of everything that's going on.
In a past life, I ran a company that was about 175 people. It's probably not as big as Kraken, but I found that there are certain people that we'd hire that it was like part of their stipulation. We really wanted to hire them, but they would only come on board with the condition that they like report to me. And then at some point, it's just like there's too many people, and you had to ruffle some feathers and change the org chart.
I've had that as well. Either, or they're upset when you've got to put somebody on top of them. And it's unfortunate that, in a startup, hopefully, if you're a fast growing company, you're doing well. And, people don't necessarily grow with the company. You might have someone who's doing great managing a team of 5 people. And like 2 years later, it might be that the team is now 500 people, and you need someone, who's kind of like at that level with that kind of experience. And the person who was good at 5 just didn't evolve.
Hey, I wanted to pause for a second to let you know that this episode of the Flippening Podcast is brought to you by a really cool product that I personally love and endorse called Uphold. I use Uphold every day, so I'm reading you my ad, not theirs. So here are 6 things that I think you should know about Uphold. First, if you're using the Brave browser, you've probably already been using Uphold every day, as it's their default wallet for holding your earned BAT tokens. Second, Uphold lets you hold and trade between crypto assets, national currencies, metals, and more in just one easy step. In fact, you can instantly swap between 27 fiat currencies, 30 cryptocurrencies and utility tokens, 6 stablecoins, and 4 metals, all from your very own wallet. Need to go from gold to Bitcoin in one trade? That's no problem. Want to send BAT to your Euro bank account? That's also no problem. Third, Uphold has 0 trading commissions and 0 bank and crypto withdrawal fees. Fourth, Uphold lets you buy cryptocurrencies directly with a credit or debit card, allowing you to lock in prices sooner than your ACH transfer can process. Fifth, Uphold allows for direct bank connectivity in almost 40 countries using ACH, SEPA, and SWIFT. Uphold recently added countries including the UK, Canada, Poland, the Czech Republic, Romania, Hungary, and Croatia. And of course, they already support the United States and USD. Sixth, and finally, you can open an account in 1 minute and start trading in 10 seconds. We're big fans of Uphold here, and as a product person, I think what they've done and what they've made seamless is really incredible. So I encourage you to try them out. To get started, just go to uphold.com/clay today. Again, that's uphold.com/clay, spelled CLAY, and that's my first name. You can also download Uphold from literally any app store. This episode is also brought to you by our longtime and trusted partner, Nexo. As someone who personally uses Nexo, I want to point out a few things that I especially like about their crypto-backed loans. First, when the price of your collateral grows, so does your credit line. Let's say that you borrow against Bitcoin when each Bitcoin is worth $5,000, but over the course of your loan, the price grows to $10,000 per Bitcoin. This means that the size of your credit line just doubled as well. I personally haven't seen anyone else doing this. A second thing that I really like about Nexo is that you only pay interest on the amount that you borrow. I've seen Nexo competitors require you to take out loans and force you to borrow the entire amount. With Nexo, you get a credit line and can borrow only the funds that you need and pay them back whenever you want with interest assessed daily. Again, this isn't something that I've seen other providers do. The final aspect of Nexo I'd like to highlight is that they give you the ability to borrow against a basket of crypto assets. For example, if you post BTC, ETH, and BNB as collateral to your Nexo account, the Nexo Oracle calculates the real-time market value of those assets and adjusts your credit line accordingly. To my knowledge, other providers in this space only allow you to borrow against one asset per loan. Finally, this episode is also brought to you by the startup that produces it, Nomics.com. Nomics is a crypto market cap website and aggregator going head-to-head with CoinMarketCap. We stand as a transparent alternative to many of the sketchy market cap websites out there. We won't name names, but I think you know who we're referring to. Anyway, if you haven't been to Nomics.com in a while, I encourage you to visit our website. We offer transparent volume statistics for nearly every cryptocurrency and crypto exchange in the space. And I believe we have the only credible crypto exchange index in the space at the time of this recording. If you're sick of scammy ads, bad design, and manipulated data provided by companies whose founders hide from public view, then check us out at Nomics.com. Okay, let's return back to the show.
In the beginning, when the team was like 10 people or something, there were people who were like, customer service agents who reported directly to me. And when we installed a manager of customer service, they no longer reported to me, and they were upset about that. And, there's still only one layer removed. Today, they're probably like 4 layers removed from me or something. But it was just, the people, I guess, enjoyed working in a much smaller environment. And you'll see, like, as you go through the growth phases, some people are just better on smaller teams. Some people absolutely hate the bureaucracy and the process that comes with, being on a team of 1,000 people or something. So I think it's just kind of like natural that people, come in and out as the company kind of changes its composure.
Let's transition to chapter 2. I'd love to kind of get a rundown, just kind of the 20,000 foot view of everything that's going on at Kraken. So, services offered, acquisitions, anything you can share around metrics. We'll unpack this. So let's start with services. Right. So you've got the spot exchange, you've got the OTC desk, you acquired, crypto facilities, which is now Kraken Futures. You've got your indices, there's margin trading. Anything I'm missing here in terms of range of services that you offer?
CryptoWatch is not in there.
Yep, that wasn't on purpose. So CryptoWatch, cool. I like CryptoWatch quite a bit. I didn't realize that was an acquisition. I thought you guys had built that from scratch.
It was very early for CryptoWatch when we acquired it. It was a one-man operation when we acquired it, which I think was it 2016? So yeah, we've put a lot of work in since we picked it up. Arthur, the founder, is still on the team. He's the basically the GM of CryptoWatch.
And then acquisitions, I've got in no particular order, but Interchange, Circle Trade. it's from the outside. That seems like a pretty baller acquisition. And then the exchanges, crypto facilities, BitTrade, CoinSetter, Carvitex, Clevercoin, Gildera. Any other acquisitions?
Yeah, we've done a couple other, just like tiny things, I guess, that have kind of been like tuck-ins. Like, we acquired the cryptofinance.ai Google Sheets plugin. It's basically just works like, I don't know if you're familiar with Google Sheets, they have a Google Finance formula or function. And it basically works just like that, but it pulls crypto market data instead of stocks or FX.
And was that to kind of extend the capabilities of CryptoWatch?
Yeah, pretty much. Yeah, we saw it as like an add-on service for CryptoWatch, and it plugs just into the CryptoWatch backend, gets all the data out of there. It was a good consolidation play because it was also like a one-man operation, and he was replicating a lot of work, that we were already doing for CryptoWatch just to bring all the data in. So now he's leading that project at CryptoWatch, and he's got other guys to help him out. So it's a good match.
I really enjoy looking at the companies and people that have come through those acquisitions. And it seems like you're definitely, like, you've attracted a lot of really cool people to your team. It's cool to see, like, Dan Held move over. Pete Rizzo, definitely an OG in the space. Just the fact that Circle Trade was open to doing the deal. It feels like within the ecosystem, you guys have really built a lot, a great deal of trust because, just seeing who's kind of gravitated towards you guys. I imagine that with some of these acquisitions, there are probably multiple bidders, and I imagine reputation goes a long way in terms of getting these deals done.
Yeah, I think it does. And, there's a lot that can go wrong in an acquisition. A lot of ways you can screw it up and just destroy value. And for most things, you want to get the team on board. If you're inheriting a product, you need someone to maintain that product, someone that knows it. You wouldn't want to just kind of buy something and then have to yourself like allocate engineers and stuff to figure it out from scratch. So the people component is huge, and finding culture fits is really important. And, I think when you have multiple bidders for something, the guys on the selling side, may also be aware, they don't necessarily, they'll have some kind of lockup, for usually at least a year, if not longer, where they have, like an earn out as part of the deal consideration. And I think that's a big factor. They want to go somewhere where they feel like, they're ideologically aligned, where, people are on the same mission, where there's a match of culture, not where they're going to hate their job every day, and then have to walk out on whatever half of the deal consideration because they just can't stand it anymore. So, I think we have a competitive advantage there in that we have historically, been very mission driven and very kind of pro Bitcoin. We're just about bringing more people into Bitcoin. Whereas I think other companies may be more explicitly focused on optimizing revenue opportunities. People often cite our stance, with the regulators, which is that, we're not immediately like bowing to everything that comes up, but we try to like find a fair position, like a compromise where we can preserve financial privacy, or we can preserve, just some basic like business standards. It shouldn't be that. And I think that our position is reasonable, and it's that the other guys, just by comparison, are, they're just so quick to comply, I think, because they're just scared. They're scared of what happens, even if you're completely in the right to not comply and to challenge, a request that comes to you. There are all sorts of ways that regulators and law enforcement can make your life difficult, in some kind of unofficial capacity. Right? Like, if you don't comply with this voluntary information request, well, they can just like choose to audit you, or choose to make statements about how you're a sketchy business because you declined this voluntary information request. So I think people respect us for standing up there and trying to hold regulators and law enforcement, I hate to say like accountable, but to some basic level of like decency.
I really enjoyed reading your letter in response to the New York Attorney General. And, you said the word reasonable. I think that's kind of what came to mind for me as well when I read that. Was your response seemed fair that, I think it was 2 weeks they wanted the information back. It would have tied up a whole legal team, much of your staff for a long period of time. It's not fair. And then you added like, hey, what about auditing the Fed? And, you kind of said some kind of cool libertarian things sprinkled in there as well. But sort of the fundamentals of your argument were very sound. And then you kind of ended with, if you want to fly down here, if you want to hop on the phone, if you want to kind of do this in a cool way, we're really, we're open to it. But to make us just kind of jump when you say jump as high as you're telling us to jump, that's just not cool. And it's not a way to run a business. So like you've managed to stay kind of in the US. Sounds like you're domiciled in the US, all that stuff, but you still push back here and there. And I think the community respects that.
It's a fine line, trying to hold it as long as we can.
What are you open to sharing about employees, users, revenue, things like that? Let's start with employees. How many employees do you have?
We are just about 1,100 employees.
Wow. So you're clearly in the headache stage of org chart development.
Yeah, very different problems than we had 5 years ago.
How about users? Are you open to sharing like monthly active users or whatever?
I don't have that off the top of my head. It's definitely growing lately. We're seeing a lot of people come back who've been dormant. The number of new users signing up is up multiples over what it was a few months ago. So I think the recent volatility in the traditional markets and maybe people also just being kind of stuck in their houses, nothing else to do, are signing up to trade. So it's been good for business. I think it's terrible for the rest of the world, but it's good to kind of have this, in a way, I guess, anti-fragile kind of business where like, no matter what happens, as long as there's volatility, things are good.
And, I know you're a private company, not trying to pry here, but I also just want to ask, are there any revenue numbers you can share or anything even general, like, we're doing, in the 50 million plus or 100 million plus 20, is there anything you can share about revenue ballparks?
Yeah, revenue ballparks. I mean, you can probably estimate this just by doing the math off of fees and volume, but it's 100 million plus. It's been profitable since 2015, I think.
Congratulations.
Thanks. So yeah, good position for a startup to be in.
And then revenue streams, obviously there's trading fees, but are there any ways that you make money in addition to trading fees?
Yeah, we make a little bit of money off of funding fees, but that's minuscule. It's pretty much trading fees.
I'm sure it looks like there's a pay, you can pay for CryptoWatch.
Yeah, that's right. Yeah. So your CryptoWatch subscription, you could also license the index from the benchmarks business. These are very small revenue streams relative to the exchange business.
And what was the like with CryptoWatch? What was the thesis there? Was that basically this is a top of funnel opportunity, and if people are going here to check prices, then maybe we can funnel them into Kraken or
that. And we thought that there's the marketing value of it. We haven't really leveraged that a lot, but we thought there's got to be a place, just for the health of the ecosystem, to benefit the ecosystem. There's got to be a great Bloomberg terminal of crypto that has all this data available for people just to see what's going on. So we wanted to support that. We thought as well, this was going to be a big investment. This couldn't be like a one-man operation. And at the time, it would have been an extremely difficult thing to raise money for as well. So, we thought, acquiring it would allow us to back it completely and give it all the resources it needs and build it into, what hopefully one day will be sort of the Bloomberg terminal of crypto. And, I'm sure it'll expand beyond crypto at some point as well.
Let's transition to chapter 3, product focus and differentiation. So I guess, apart from branding, how do you think about Kraken and sort of product differentiation within the space? Like if you had to write, a lot of companies have, sort of cultural values or core values, but if you had to kind of enumerate what your product values were or are, what would you say they are?
Things we've really focused on over time are security, first and foremost. We were building this.
You guys have never been hacked, right?
No, that's right.
It's awesome.
It's great, knock on wood. But it doesn't come without trade-offs either. It's sort of, you can view it the same way you view regulation in a way. And that, I don't know if you play video games, but, there's, this concept of the glass cannon, in video games, which is like someone that basically like rolls a character, which is like all attack and zero defense. And, they're killing enemies like, hot knife through butter, but they take 1 point of damage and, they blow up. So I think there are a lot of businesses that run that model in the space, which is like super scary to me. It's scary to see how fast some other businesses are kind of like developing their product. And, I'm thinking, okay, your whole company is like 20 people. Our security team is like 40 people. How are you doing this, in a way that is like totally secure? I just like, this kind of stuff gives me like cold sweats in the night that like, and you see this happen over and over with local exchanges. And as you did with like Quadriga was like the most recent, like big example where this exchange is, I think they were like the largest Canadian exchange at the time, was like 3 guys. And it's hard to see from the surface, what's going on behind the scenes. It's not that hard to put up like a trading interface, and you could even be matching orders like in an Excel spreadsheet. And as we found out, the CEO is actually processing funding transactions, deposits and withdrawals by hand, manually, out of like a wallet that he just controlled the keys to, on his own computer. So it's like really hard to know from the surface what's happening in other places, but knowing what it takes to do things securely, I kind of cringe when I see how fast other guys are moving or what they're doing with the size of team that they have. And other than that, I'd say like customer service is really important to us. It's something that, at our last business, which was the virtual goods business, was something that we also, felt was a differentiator for us, because this was another business you could just run from anywhere in the world. And, there was a lot of price competition. And what we heard from our customers over and over was just like, we come to you guys because you have the best service. You've got people to help us 24/7. You always respond to tickets, within 5 minutes. And, it feels really personal. And, they were willing to pay more for that. And I would always rather be running a business that has higher margins that people are willing to pay more for than to just be competing for, how do we offer this service as cheaply as possible and, only give people the bare minimum that we can get away with. I think it's just a much more defensible business to have a really strong brand that people feel an emotional connection with than to just be kind of making yourself a commodity business. So customer service is really important. I mean, to me personally as well, it's really important. I'm extremely picky about customer service when I go anywhere, for dinner or to a hotel or something. That's something I always pay attention to. And the third thing that we've really focused a lot on, since the end of 2017, which was like the last big bull run, where we absolutely got crushed, and basically everyone in the space got crushed with the number of new users that were coming in. I mean, there were days where people were getting 50, 100,000 new users signing up. And along with that was like 20,000 support tickets every day. or, any kind of blip in the service would just cause, 10,000 tickets to appear. So that kind of uptime, getting to like 100% uptime, flattening the curve, if you will, like looking for things like, okay, what did people submit support tickets about? And, it might only be, there were 10 tickets last month about this thing, but in a scenario where you have 50,000 new people signing up, you might get like 5,000 support tickets about that thing. So just looking for a bunch of stuff like that. Like, what are all these things we can knock out that are going to reduce the number of tickets that come in like a peak, flood, bull run kind of scenario where you have like 1 million new people coming on that just like don't know anything and they're like FOMOing in, and really need hand holding. We've done a lot of that, and our uptime has been awesome, over the last, basically since January 2018. We rolled out like a major infrastructure upgrade. We've had a couple other big upgrades since then, and things have been super solid, and fingers crossed, hopefully, will continue to be super solid going into this upcoming, big bull run that is inevitably going to happen as soon as the dollar collapses.
What about, kind of user personas or, verticals within the space, right? Like there's kind of this prosumer persona that, they don't work for an institution, but they are a full-time trader. There's kind of maybe the more typical, they just want like a one-sided, fiat on-ramp where they can purchase some Bitcoin. There's institutions, you can't serve them all equally. Would you say there's kind of a top one or two personas or kind of sub-verticals that you're most focused on?
Historically, we have been more focused on, say, like maybe the prosumer, kind of trader, as you said. We have a relatively complicated, interface. If you're not used to trading, if you've just been kind of trading stocks, you might not have any idea what an order book is, or how does it work? Like what is market depth and what is slippage and stuff like this. So that was kind of like how we got started. But over the last 6 to 12 months, we have really been putting a lot of effort into, some changes that are coming up in the next 2 months that will be released. One is a retail mobile app, which is like, makes it dead simple to buy and sell Bitcoin. And another is, basically like an upgraded, simplified version of the desktop website, for the retail consumer. And we want to put more effort into that because we think it's an area that we've neglected, but also it's, I think, the biggest growth opportunity because that's, these retail consumers, the grandma that just wants to buy, half a Bitcoin or something, for long-term savings this is like 99% of the world. And, we want to have a really easy kind of onboarding, and flow for these guys to be able to get into Bitcoin. We want to make getting into Bitcoin easy and bring more people into the space. And the exchange business will power all that, right? Like the liquidity for that operation will come from the exchange, which most people might not ever care about. They can opt into that if they really want to trade with an order book. So I'd say like the retail consumer is an area of focus for us now. And then I'd say like the market makers are a big deal. And, probably all of the exchanges are catering to the market makers in some way because they are bridging the liquidity from all of the platforms and, providing that liquidity on your platform for the retail consumer, or the less sophisticated trader. They're often asking for all sorts of things as well. And in some ways, they may be adversarial to the exchange. They'll ask for an edge. Basically, they always want an edge, right? And, it can be harmful to give one guy an edge, that you don't give to everyone else, right? You might end up with one giant shark instead of an ecosystem of sharks. You want to have diversified revenue, not be completely dependent on one guy. So, there's always a balance there in determining, what you're going to cave on. It isn't just like, obviously, like we give the customer what they want because, if they had it their way, you would give them the entire business.
The market maker thing is interesting. I know a few large market makers, and most exchanges won't even get them, won't give them the time of day. I mean, they'll barely even get priority email. They certainly can't get on the phone with anyone. It does feel like a point of differentiation. It feels just like someone on the team will give them a phone call and actually answer a question and kind of establish a real-time line of communication.
For sure. I mean, you have to. I mean, this is a lesson learned in the virtual goods business for gaming, and any game developer will tell you this as well. If they're selling loot boxes or whatever, you have whales in your business, and you might make 90% of your revenue from your top 100 clients. And the whales expect to get special service and expect to have someone on call. And we like to take very good care of these guys. We don't always give them exactly what they want, but we want them to have someone on speed dial that they can call if there's a problem. And again, service is a differentiator for us. So I think it's super important. I think I wish more businesses out there actually had like a whale tier of service, because it gets kind of annoying when maybe you've used, let's say like something like Postmates. If you've used Postmates all the time, I don't know, I constantly had this issue with them where I would want to order this, like a burrito at midnight to be delivered to me. And it would be like, it would constantly get rejected. I think because the Postmates fee was like, 10% of the price of the burrito or something like that. And of course they would just be like, it's not worth it, but I might have paid like $20 to have that burrito delivered to me, but there was no way to do that. There was no way to say, give me the best Postmate you have. Definitely one that's like not on crack right now. And, who can find his way here in the middle of the night. And, I'll pay $20 for that. That didn't exist. My order just got lumped in with the system of other guys, bidding $1 to get something delivered. And, so I think that was like a missed opportunity for them. So I think some people, and, this is like the whole value prop of like, first class flights and like, 5-star hotels and stuff. It's like what you're getting, like the product is like not actually that much better, but the service around it, is way better. And that's like what you're paying for, like the service treatment on a first class flight versus like an economy is like night and day, like you're treated like royalty in first class and you're treated just like cattle in economy. It's crazy what people are willing to pay for that, right? Like your first class ticket might be like $20,000 and the economy on the same flight might be like $500. So, I think that goes to show that like the people, the whales that value being treated well are willing to pay a lot for it. And, you've just got to like give them an opportunity to pay it. You've got to create that tier for them, that they can buy from you. And, I think that's like a missed opportunity for a lot of businesses.
Yeah, I completely agree. So like if you're let's say you're a top 5 market maker on Kraken, would there be like the equivalent of an account executive or someone there that's your point of contact?
You would definitely have a dedicated account manager that you could call 24/7. And if that guy happens to be asleep or dead or whatever, there is like a rollover kind of thing. You'll have a second guy who can answer. And if he's not around, it goes to a third guy. So the goal is, that there's never anyone that you can't reach within like a few seconds if you have a problem.
Thinking about non-fungibles, I'm a huge fan of like CryptoKitties, Gods and Chain, not as investment opportunities, but just it's just really interesting. But I also have spent way more money than I'd ever admit to on domain names. Once I bought $1 million domain name, learned a lot about that process. So I love domain names, and I'm personally a huge fan of like the Handshake Network and how they're opening up the top level domain space. Have you sort of thought about seriously, allowing people to trade non-fungibles on your platform, or is there just it's not a big enough market yet with kind of the ROI that you need to make that work?
We are interested in that. It's a very different business. You can't just have like an order book, for these things. You need to build out like an e-commerce store or like an auction site. I think it's still very early for this, but I do think it's increasingly going to be something that people are interested in. So it's more of a longer term thing for us. But yeah, I mean, this would just be, taking me back, 20 years to the old business. I'm very familiar with how to do this. I just think relative to the other opportunities in front of us right now, it's not a high priority, but, yeah, I think it's going to be awesome. And I think you're going to see other things tokenized too, not just, CryptoKitties, but you'll see like tokenized house or whatever, and you can if you can make it like a bearer asset out of anything, that market for everything else, that physical stuff that could become tokenized, will become much bigger. And I think you'll see other sort of reserve tokens, in the way that like Tether is a reserve token, like there's a bank account or a vault somewhere with like a bunch of dollars in it. And then they issue these tokens off of that. I think you'll see like a similar thing with other assets. It could be like diamonds or something where there's, De Beers is now like, issuing tokens for diamonds that they have in the vault. And, that thing can be redeemed somewhere, or, can be traded.
Hi, this is Mike cutting in from the editor's booth. If you're interested in asset tokenization, check out our Tokenize the World documentary. It's a series that we first published back in March 2019 and have been updating ever since. Catch it at flippening.com/tokenize. Okay, back to Jesse.
I'm personally like kind of bearish on like collectibles in general. I have a bunch of experience with this from Magic the Gathering cards. I used to trade Magic the Gathering cards and arbitrage like card prices in different markets as I was traveling around to tournaments and stuff. And I think that, it really, the value of these things, I think you can look at baseball cards or look at comic books and the value there over time. And they kind of have to, I think for them to remain valuable, either they have to be like in some way like historically significant, like on a universal level. There's some things that might be like historical significance, like, the original copy of the Bill of Rights or something, found in the back of a painting, something like that. But like cards like, like the Mickey Mantle rookie, baseball card or other guys, like other baseball cards and even comic books you've seen like either be stagnant or just like fall off a cliff in terms of value. And I think it's because while they may be rare still, there just aren't people interested, like the people interested in buying them are like dying. And the new people, like they have kids growing up today, Gen Z, no idea who Mickey Mantle is. Maybe not even interested in baseball. They would buy a card for like the hottest TikTok star or something like that. But, like some old baseball dude that their grandpa liked, like why would they see that as a store of value? So I think that, remaining in use, or, remaining as part of like the pop culture or like, the zeitgeist of society somehow, I think is important to value. And some Magic cards still have, Magic has been able to retain or increase in value because the player base is still very strong. But it's only been, like 25, 30 years or something like that for Magic. So, it's still short, it could be, there's another game that comes out that causes everyone to stop playing Magic. And then I would be very bearish on the value of Magic cards if it's no longer like a status symbol, like the beta Black Lotus is worth a lot because like when you drop it in a tournament, everyone's like, oh my God, like, this dude, it's like driving around a Lamborghini, right? It's like people are in awe of that. And, when you can't do that anymore and it's just sitting in a box in your house, I think it loses a lot of the value. So I think NFTs, CryptoKitties, they were super hot for a time, but like once the trend kind of faded and it wasn't like in front of everybody all the time, the market kind of crashed. So I think, that's just something to keep in mind with these collectibles, these digital collectibles is really, I think they're kind of only they may be only momentarily valuable, and people can quickly lose focus and move on to something else. So I think the first thing to figure out is like the staying power. I know there's some digital versions of Magic that are like some like DeFi card games. And I think for those cards to remain valuable is going to just be completely up to how popular this game can be over time.
Let's say you wanted to start an exchange from scratch today. And maybe your answer would be that you would not do that. But if you were going to start a crypto exchange today, kind of understanding the barriers to entry and the existing moats that exist, and what would you do? Would you kind of go into a smaller country and just create a simple one-sided fiat on-ramp? Or would you focus on, maybe the NFT space? If you wanted to build again, let's say you had no Twitter following, no sort of huge stash of personal wealth, and you wanted to just kind of do something that had a really high probability of success in kind of just sort of nail a niche or a vertical or sub-vertical within the exchange space, what do you think you'd do?
Yeah, good question. And yeah, I definitely would not start another exchange now, knowing everything that I know now and just where the ecosystem is today. There are a lot of options. But I think that, if you wanted to be disruptive somehow, if you were going to steal market share, you have to do something that no one else is doing. And that might mean you've got to take on like way more risk. And, we've seen exchanges like startup exchanges over the years who have managed to steal market share. And, they have done it usually through taking on more risk. If not that, through offering like crazy products that like no one else thought of, like, really creative, like derivative products or something like that, creative contracts. So like from a risk perspective, like what we've seen, we've seen the torch be passed a couple times from exchange to exchange as, exchange emerges. They are going crazy with kind of their product offerings or their approach to compliance. Like maybe their differentiator is like zero KYC. You can sign up with an email and you can start trading $1 million a day, no problem. That is something that, something like an exchange like us that is under scrutiny all the time because of our size and because we're constantly applying for different licenses around the world and being audited and all this stuff. Like that's just an approach we just cannot take. But if you were not risk averse and you felt like you were small enough, you could fly under the radar for a while, you might be able to grow that way. And we've seen this happen a few times, and the exchange has grown, but they get to a point where they start to get noticed and they start to get subpoenas and they start to get threats from regulators. And then they change that behavior. And then someone else emerges that basically takes the reins from them that has adopted this like zero compliance strategy or, extreme risk taking strategy. And then they are able to grow to a certain point when they start to get noticed. So that's like a proven strategy. But what do you do when you start to get noticed? And then how do you differentiate from there? I think is a really tough question. I think serving a local market is great, but can you support your basic infrastructure costs, with only serving a local market? We've seen that historically, like that's very difficult to do because, doing security right is super expensive and maybe you really need, like a global scale business and that kind of revenue to support that function. So there's like the compliance approach. And then I feel like on the product side, maybe you can think of something that no one else has thought of. I don't know. If I had thought of that, I would be doing it. So someone will have to be more creative than I am.
Do you think U.S. citizens or let's say you let's say you come up through Y Combinator and, the token wisdom is, start a Delaware C Corp and, get an account at Silicon Valley Bank and, raise funding from VCs with sort of traditional docs. Do you think that people who start exchanges are at a disadvantage if they go down that path versus maybe the paths that someone might go down if they were raised in places with a lot of regulatory uncertainty, with like very authoritarian governments that are used to sort of just living on planes and hopping from jurisdiction to jurisdiction and sort of evaluating some of these jurisdictions against each other and filing for all kinds of different things and just sort of living this transnational life. Are we kind of at a disadvantage in the United States because of the established patterns that are in place for startups that we just sort of assume are right when we're just getting started?
We've just seen guys based in China or other parts of the world who don't have the same risks we have in the United States, are able to move much faster. On the other hand, it was hard to know back in 2011 how things were going to play out. I wouldn't have expected so much uncertainty to still exist in the United States. I would have expected, a different, like maybe more enforcement around the world. So, I don't know if it could have been predicted. It certainly seemed like back in 2011, going the traditional route of raising money in Silicon Valley and doing things completely above board was like a safe path. And there also wasn't all this international competition at the time. And also, nobody had crypto. So you needed to have like a bank on board. And the easiest way to get a bank on board is to have your gigantic, super powerful investor put some pressure on this bank for you. I don't know if there was another way to do it. We got lucky in getting a bank account in Germany through a startup bank called Fedor. But, there was only one bank that was doing Bitcoin in the United States for like 2 years, and they were only working with one company, and they were only working with that company because of the investors that they had. So, I would say that approach paid off extremely well for them. They basically had a 2-year head start in a very large market. But, when, I think that model kind of broke when Tether emerged, and then there was a way to have dollar exposure without having a bank account. And then you could go completely unbanked. And then if you didn't have to convince a bank that you were a legit business or that the regulator wasn't going to crack down on them, you could dodge that requirement entirely, then that opened up many more possibilities for you. You could basically do anything you wanted, from anywhere. So, that didn't exist. Tether didn't exist back in 2011, and it didn't really become a big thing until, I don't know, 2017 maybe. When this bull market started to take off, and a lot of people were able just to hold dollars and to trade on exchanges that had no banking connection whatsoever, no regulatory oversight whatsoever, which meant that they could do a lot more stuff, and which meant that they could actually offer the customer a better user experience, because a lot of the friction points that we put in front of people are not because we don't want their business, but because we're required to by a regulator, or if not the regulator, required to by our bank or our fiat funding partners. I think it's changed over time, what you can get away with. If I were starting a new business now, I would probably do crypto only and rely on, I would try to capture people that already have crypto and just use stablecoins and let them trade that.
If you kind of peer into the future, would love to hear either a general statement about where you think Kraken is heading or where you'd like to go, or maybe make an analogy to kind of legacy businesses. Like maybe the best metaphor is that it becomes kind of like a bank, or the best metaphor is it becomes like the New York Stock Exchange, or the best metaphor is it kind of turns into, I don't know, something altogether. Do you think there is sort of a straight analogy there, or do you think the space is just so new and unpredictable that it's hard to kind of do that? Anything you could share about sort of big picture where you see Kraken going would be helpful.
Yeah, a lot of directions we could go, and it's probably going to change over the course of time as DeFi becomes more useful. But, probably some combination of like a Fidelity and a CME group, where we'll continue to have markets. I think price discovery and markets and liquidity is, kind of the core of what we do. And, we're trying to build other services around that really leverage that. But that's like, other tools for retail consumers, like, more assets to trade, exposure to more asset classes, maybe, automating of trading strategies, the simplest thing being like dollar cost average. There's all sorts of like insurance, products that could be offered, other kind of wealth management services that could be offered. There's a ton of crypto millionaires out there that, could probably use some sort of like, wealth management advice. So that seems like, I don't know where everyone's going for that now. Maybe everyone's just long Bitcoin, and it's probably hard to outperform that. So, maybe they don't need any wealth management advice. There's so much stuff we could do. It's really, the hard part is really just figuring out what to focus on in the near term and, what can wait. But I hope the DeFi develops a lot. I hope that people don't have to trust centralized exchanges forever or centralized custodians. I hope that we can continue to facilitate, these financial services, that will hopefully like primarily exist on chain somewhere, where if people don't want to use us, there's still a way through a wallet that they control on their own to interact with, smart contracts and stuff. So, maybe we'll just end up being like a customer support center and like a user interface for DeFi products down the road. And I think that would be awesome. I would love to be out of the custody business and just be helping everyone kind of, do their thing, in DeFi.
If you could wave a magic wand and altruistically and instantly do something for the space and for the ecosystem, like what would it be? Would it be like, digitization of the dollar, everyone learning Chinese, regulatory certainty? Like what is there something that immediately comes to mind?
Yeah. I mean, removing all of the regulation in the world, would be amazing. That would cause an explosion of activity instantly. I think that's like, very wishful thinking, and there are a lot of other implications to that. I don't know if, are people educated enough? I think there'd be a lot of hard lessons learned in the short term, by people who are used to being protected, and not having to think for themselves. But, I think regulation is one of the big things holding us back right now. And, regulatory certainty might be an upgrade or it might be a downgrade. There's been some very horrible regulation. We have regulatory certainty in New York, and the bit license, is horrendous. So, it could go either way on that. I think it's better just to let the free market flow and get people educated. And, I think the market will find a way.
That concludes Clay's conversation with Jesse Powell. I hope you enjoyed it. Before you go, I want to invite you to subscribe to our fully customizable daily crypto newsletter. It's the first of its kind in the industry. You choose the delivery time and cryptocurrencies. We ship tailored pricing data and market news 7 days a week. It's a great way to cut through the noise and drill down to the crypto market info that matters most to you. To subscribe, go to news.nomics.com. Again, that's news.nomics.com. All right, that's all for this week. Stay tuned for next week's episode. Until then, take care.
That's it for this week. To sign up for our free crypto investing newsletter, listen to other episodes, or get the show notes from this episode, please visit flippening.com. I also invite you to check out the startup that funds this podcast, Nomics, spelled Nomics, at nomics.com. Finally, if you got value from the show, the biggest thing you can do to help us out is to leave a 5-star review with some comments and feedback on iTunes, Stitcher, or wherever you listen to podcasts. Thanks for listening, and see you next week.